Right now, as you're watching this video, the United States stock market is falling, gas prices are spiking, your retirement account is shrinking, and the biggest financial story in decades is unfolding in real time. And most Americans have no idea how deeply it will hit their wallets. I'm talking about the US-Iran war, a market meltdown unlike anything we've seen since 2008, a private credit bubble that Wall Street is desperately trying to hide from you, and what you need to do with your money right now before it's too late. Let's start with the story that is dominating every single financial newsroom in America right now. The United States is at war with Iran, and this war isn't just a foreign policy issue, it is a direct attack on your bank account. Here's why. Iran has closed the Strait of Hormuz, a narrow strip of water in the Persian Gulf, for the first time in history. Now, you might be thinking, so what? I don't live near the Persian Gulf. But here's what you need to understand. Roughly 20% of the world's oil supply passes through that strait every single day. When that pipeline of oil gets blocked, prices don't just go up a little, they explode. The International Energy Agency has already called this the largest oil supply disruption in the history of the global energy market. Let that sink in. Not the biggest disruption of this decade, not the biggest since 9/11, the biggest ever recorded. Now here's what that means for you at the pump. If this war continues and the strait remains closed for just a few more weeks, Goldman Sachs is predicting that oil prices will cross $100 per barrel, and gasoline across the United States will hit $3.50 per gallon on average. And in states like California, prices have already surged above $5 per gallon. Some Americans are finding their entire tax refund this year is being swallowed up just by rising gas costs. You work all year, you file your taxes, you expect a little relief, and instead, it all gets eaten up at the gas station. Now, President Trump has set an 8 p.m. deadline tonight, April 7th, 2026, demanding that Iran reopen the strait or face devastating military strikes on power plants and bridges. Markets on Tuesday fell sharply, with the Dow dropping 382 points, the S&P 500 down 0.9%, and the Nasdaq sliding 1.3%, all because investors are terrified about what happens next. UBS has already cut its year-end target for the S&P 500 from 7,700 down to 7,500, CNBC. And analysts are warning that if a deal isn't reached tonight, we could be looking at one of the most volatile weeks in American financial history. The bottom line? The war in Iran is the single biggest financial risk to the average American right now. Your gas, your groceries, your mortgage rate, all of it is tied to what happens in the next 24 to 48 hours. Now let's talk about the stock market, because I know a lot of you are watching your 401ks and investment accounts with your stomach in knots. And you deserve the truth, not the sugar-coated version. The effective closure of the Strait of Hormuz is shaping up to be the largest oil shock on record, and historically, long oil supply disruptions have driven stock prices down significantly. Here's a sobering comparison. During the Gulf War in 1990, crude oil prices rose 135% between July and October of that year. During the Afghanistan War, oil roughly tripled between 2000 and 2008. And here's the scary pattern. Frequently, recessions follow large increases in oil prices. Now, I'm not here to panic you, but I am here to be honest with you. In 20 major post-World War II military interventions, the S&P 500 fell an average of 6%. But when energy supplies are at stake, the pain is more acute. What does Wall Street think? Morgan Stanley says investors may need to start pricing in a world where geopolitical risk is no longer occasional. It's a permanent part of the backdrop. They're recommending increasing exposure to defense, security, aerospace, and industrial resilience sectors. So what should you do as an everyday investor? Number 1, do not panic sell. History shows that investors who sell during wars and crises almost always lock in their losses and miss the recovery. Number 2, look at energy stocks. When oil prices surge, energy companies profit. Stocks in the energy sector have been among the few bright spots this year. Number 3, CNBC analysts are noting that Nike is currently the most oversold stock on Wall Street after a wild week of trading. That's a signal that some quality companies are getting dragged down unfairly, and patient investors who buy the dip on fundamentally strong companies tend to win long term. Number 4, don't ignore bonds. The 10-year Treasury yield has already jumped to 4.46%, its highest level since July 2025. Higher yields mean lower bond prices right now, but they also mean better returns for new bond buyers going forward. Okay, so we've talked about the war and the stock market, but here's the story that the mainstream media is barely covering, and it might actually be more dangerous to your long-term financial future. It's called private credit, and there is a $3 trillion black hole sitting at the center of the American economy right now. Private credit refers to direct loans from private investors to private companies. These are often riskier, less regulated than traditional bank loans, and far less transparent. NPR. Here's the problem. For years, wealthy investors poured money into private credit funds chasing high yields. But now, spooked investors are scrambling to cash out, and some funds are not letting them. It's all fueling fears of another financial crisis. NPR. A Goldman Sachs poll of 784 institutional investors found that Wall Street is increasingly worried about the durability of private credit markets, specifically about underwriting standards, stress in borrower sectors, and how an oil-driven shock could ripple through these less liquid corners of the market. And Citi's chief global macro strategist put it bluntly: banks are starting to write down growth forecasts, and the daily news flow out of private credit doesn't sound great. Now, why should you care about this? Because private credit isn't some abstract Wall Street thing. Many pension funds, insurance companies, and retirement accounts have exposure to private credit. If this market seizes up the way the mortgage market did in 2008, and I'm not saying it will, but I'm saying the risk is real, ordinary Americans could feel it. Watch this space. Bloomberg has been reporting on what it calls hidden cockroaches in private credit: opacity, complexity, and hidden risks that investors were drawn to chase high yields without fully understanding the downside. All right, let's bring this home. Because all of this, the war, the markets, the private credit bubble, eventually lands on your kitchen table. So let me give you the real-world financial picture for everyday Americans right now. Mortgage rates are rising again. The 30-year mortgage rate has already climbed to 6.38%. If you were hoping to buy a house this spring, this is a gut punch. Every quarter-point increase in mortgage rates adds hundreds of dollars to your monthly payment over the life of a loan. The Fed is stuck. The Federal Reserve cut rates 3 times in 2025, bringing the federal funds rate to a range of 3.5% to 3.75%. But now, the Fed is deeply divided on what comes next. With oil-driven inflation roaring back, cutting rates further could make inflation worse. But keeping rates high hurts borrowers. There's no easy answer here, and for Americans carrying debt or planning major purchases, interest rates will remain elevated for much of the year. Student loans are back with a vengeance. The federal government has resumed garnishing the wages of student loan borrowers in default, the first time paychecks have been at risk since the COVID-19 payment freeze began in 2020. More than 5 million federal student loan borrowers are currently in default, and that figure could climb to roughly 10 million. If you or someone you know has federal student loans in default, this is urgent. Get on an income-driven repayment plan immediately before a wage garnishment notice arrives. I'll link resources in the description. Retirement savings crisis. A BlackRock survey reveals that 30% of Americans have no retirement savings whatsoever. Zero. None. In the wealthiest country in the world. Meanwhile, financial experts are warning that even people with strong 401k balances are falling into retirement planning pitfalls like withdrawing too early, not diversifying, or underestimating healthcare costs in retirement. Healthcare costs are crushing families. Rising health insurance premiums and expired Obamacare subsidies are driving healthcare affordability to the top of Americans' domestic financial concerns in 2026. If you lost your ACA subsidy this year, you need to compare plans on healthcare.gov immediately. The gap can be hundreds of dollars a month. Okay, you've made it this far. You now know more about what's happening in America's financial world than 90% of people around you. So let me leave you with 3 concrete, actionable steps you can take this week to protect yourself. Step 1. Build or rebuild your emergency fund. With markets volatile, war ongoing, and a jobs market under stress, you want 3 to 6 months of expenses sitting in a high-yield savings account. Today's top high-yield savings rates are offering up to 5%, so your emergency cash is actually earning solid returns while it protects you. Step 2. Audit your debt immediately. With the Fed keeping rates elevated, any variable rate debt you have, credit cards, adjustable rate mortgages, variable personal loans, is costing you more every month. Make a list. Prioritize paying off the highest interest debt first. Look into balance transfer offers with 0% introductory periods to buy yourself breathing room. Step 3. Don't stop investing, but diversify. If you have a 401k or IRA, keep contributing. But take a hard look at whether you're overloaded in tech stocks. Morgan Stanley is recommending defense, security, aerospace, and industrial resilience as sectors likely to benefit from government spending for years to come. Talk to a financial advisor or, at minimum, rebalance to ensure you're not 100% concentrated in any one sector. The bottom line is this: America is at a financial crossroads. The war in Iran, rising oil and gas prices, a shaky stock market, a hidden private credit bubble, and mounting personal finance pressures are all hitting at the same time. But here's what I believe. Informed people make better decisions. You just spent 15 minutes getting smarter about your money than most people will in the next month. That matters. If this video helped you, please smash the like button. It genuinely helps this channel reach more Americans who need this information. Subscribe so you don't miss tomorrow's update because this story is moving fast. And drop a comment below. What's your biggest financial concern right now? Gas prices? Your retirement? Student loans? Let me know. I'll see you in the next one. Stay informed, stay smart.